topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, good morning and welcome, man. It's a great day to be here. It's a Monday morning. Great to get up and get to work and, man, have a wonderful program. Now, I know if you're listening, you saw what we were talking about is IRS problems and what relief you can get. I know you woke up this morning and went, oh my God, I still owe the IRS. What am I going to do? What kind of relief can I get? What's going to happen to me? You know, all these concerns. I mean, we hear it every single day from clients, from prospects, people calling in, talking about, man, I owe the IRS, $10,000, $20,000, $30,000, $50,000, $1 million, whatever that number is. It's a large number to you. And it's a real big concern. I mean, owing the IRS is frightening. It doesn't matter what the amount is. And it affects your whole life. Stress, strains, worries, strains on the family because you're stressing out. Maybe your wife or husband is stressing out. And then every time you go to the mailbox, IRS letter after IRS letter, they never stop. And then you got the liens. And, these things all affect you and your life. And then just out of the blue, the IRS then levies your bank account, garnishes your wages. And now you're beating your head against the wall going, oh my God, I should have handled this a long time ago. So today, when you're talking about owing the IRS, whether it's because of an IRS audit, whether it's because you just didn't file your back taxes and you need to get those filed, whether you filed your taxes and you've now got that amount plus all the penalties and interest added into it, you've got to step up and start doing something. With taxation solutions on your side, that burden of dealing with the IRS can be just lifted off, right off you. And we've got great plans that we work with to get you relief. People ask me all the time, well, what kind of relief can I get? Well, IRS offers many different types of relief, and you got to know which way to go and what to do and how that relief is going to affect you, not just today, but tomorrow, next year, and the years ahead. So yes, you call the IRS, man, they have got a great plan for you. What is that plan, you say? Hey, pay me everything you got today. Pay the bill off. That's their first plan. Can you afford to? No, if you afforded to, you would have already done it because you don't like the penalties and interest that are accruing, and you would have paid it off back when you first filed your taxes. Simple, right? Well, that's their first plan. They're going to ask you questions. How much is in your bank account? How much equity do you have in your house? What's in your retirement accounts and where's it at and everything. And then they come back and say, well, then you can go and get the money from your retirement account and pay us. you can go and get the money off your house and you can pay us. Well, see, that's a simple way that the IRS is looking at this. You can afford it. And you go, whoa, 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 wait a minute. I don't have the ability to pay. Well, they do. According to them, you do. They think everything you have is theirs. That's why it's called the IRS. Put that together, it's theirs. Everything you own is theirs. That's why they have the ability to put liens on you, on your property, everything you own. And they have the ability to go through and levy your bank account, levy even retirement accounts, foreclose on your house, take your house from you. They have the ability to go garnish your wages, garnish Social Security. So inaction leads them to take action against you. And when they take action against you, now all of a sudden you're behind the eight ball and nowhere to go. You have to figure out how to deal with this. So what is their purpose of that levy on your bank account or garnishing your wages? Is to what? Get your attention. The letters serve a purpose. The letters go through a whole series to get to the point of the final notice of intent to levy. And trust me, when they send that out and they send it out certified, whether you go and receive it, whether you open it, whether you sign for it, is considered received, even if you don't go to the post office. Even if they don't have your current address because you didn't change your address, it is still considered received. Whatever address they have is constructively considered the correct address. It's all on you, the taxpayer. So, they now levied your bank account and they got your attention. Matter of fact, they basically just slammed your head against the wall and said, hey, you don't have any money left in your account. So what are you going to do? You're not going to be able to pay your mortgage. You're not going to be able to pay your car payment. You're not going to be able to pay your insurance payment. You're not going to be able to buy groceries or food or anything else because they just took everything that you have in that bank account. You now default on credit cards. You default on your house. You default on insurance. All that stuff gets defaulted because what? They just took it all. Now, is that the IRS's fault? No. Your fault? Yes. Hate to put the blame there and tell you that it is your fault, but it's because you've not acted upon dealing with your IRS problem. So maybe after they've done that, what is their next thing they're going to do? The next thing they're going to do is look at garnishing your wages. They don't know where I work. Oh, yes, they do. Remember that W-2 you got? That notified the IRS where you're working, at the very least. Not to mention, when you were on the phone with them, they asked you that question. And how much money do you make? Innocent question, got them the information they needed to pursue you for a wage garnishment. Oh, I'm not working, I'm just on Social Security. Social Security is part of the government, isn't it? And you get a form that reports how much you got from Social Security. Guess what? They just garnished that as well. Albeit a small percentage, but it is still a percentage, and it still affects you really bad because any amount coming out of your Social Security is devastating, especially if you're using that to live on in retirement or using that to live on for disability. They are going to take your money. Because why? They consider it to be theirs. See, you got it. It's not your money, it's their money. You have equity in your house. It's not your equity, their equity. So, you got to start being active and proactive to resolve your tax problem with the IRS. And that's why we have taxation solutions. taxationsolutions.net is our website. You can go to taxation. You can call us here at a free consultation at 888-930-1016. Again, 888-930-1016. And let's talk about your tax relief. Now, what happens when you call? So when you call us, yes, we're going to ask a lot of questions. We need to know how much you're in debt for. How much does the IRS truly say you owe? The second thing we're going to talk about is, what is your income? How much money does you and your spouse have in debt and their income coming in? And, so you tell us what you're making, what your spouse is making, gross, what your net is, so we can sit down and start figuring out, hey, what kind of solution you're going to have. We're now going to ask about other assets, your home, equity in your home. We're going to talk about 401ks, IRAs, investment accounts, vehicles. Do you own them outright? Do you have loans on them? How many cars do you have? All these things are going to be questions that we're going to be asking to compile what? A solution to your problem. Now, if you call somebody else and they don't ask those kind of questions, and they tell you, hey, you're going to be like Oprah Winfrey, who says, you're going to get. So in this case, it's you're going to get an offer, you're going to get an offer, you're going to get an offer. They don't care. They know it possibly isn't right, but they're going to say, hey, this is what it is, because what? Everybody believes I get the best solution out there by doing this. Well, it doesn't always mean it's the best solution. So what relief can you get? Well, it all depends on your situation. So the IRS offers several different solutions to your problems that we can work through with the IRS to determine within the IRS rules what's right, and then explain it to the IRS that we're going to go this route or that route and make them see the light at the end of the tunnel to get you the solution you need. Now, that takes time. It takes a lot of work. It takes knowing the ins and outs and the rules behind everything you've got going on with the IRS. So, we sit down and we look at your data, your debt, and everything else from there. When you go and become a client, first thing we're going to do is a transcript analysis. Now, what's that going to do for us? That is going to help us determine what your liabilities are. Are they right? Are they wrong? Is the IRS requesting more money than you actually owe? Did the IRS get it wrong? Maybe you don't have all your returns filed and they filed them as a SFR, substitute for a return, and we need to correct those. So those are all the things that we need to do to determine what your true liability is before we ever head down that path to the solution to your problem. Now, solutions come in many different facets, in many different ways. The solution that you need is determined by that tax analysis we do that gets you all that information, that outlines everything that you owe, that outlines, the little details behind it. Did you file? Did you file timely? Did they have something wrong? Did they audit you without your so-called knowledge? Did you not answer certain letters that would have adjusted your tax debt? Did you not file? What is the statute of limitations? When will the statutes run out? Statute of limitations is the date that the IRS has to collect. So they have 10 years from the date you filed and they accepted the return. So, if we're coming up on statute of limitations, that changes maybe what we need to do when we go for a solution. Maybe the statute of limitations are still ways off, and it changes what we're going to do for your solution. And, so we go through that analysis to determine what's the best solution for you in your case. Now, we're going to take a short break. We're going to come back and talk about that tax analysis, maybe some outstanding taxes and back taxes and what you need to do. And then we'll continue moving down the path to get to what are your solutions and what relief can you get to your tax problem. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're having fun. Well, okay. I'm having fun talking about what we do and what you can do to get relief to your tax problems. Man, if you got the tax problem, you're not having any fun today. Not even having fun listening to me. I know if I had a tax problem and the IRS levied my bank account, I go, Mr. Fowler, I really don't care what you have to say. Just get to the point and get me relief. Well, part of that point is determining what that relief is going to be. So we did the transcript analysis and we sit down and we look at it and we go through it with you and explain to you, hey, you filed taxes 9 years, 6 months ago, and you have 6 months left on statute of limitations, and this debt is going to go away. So now what we need to do is keep the IRS at bay for 6 months so this debt will fall off because it hits the 10-year mark. A little bit of relief right there in the first 6 months. Second part is, hey, you have other tax debt that maybe is there because you didn't file certain years of taxes. And what happens when you don't file? The IRS doesn't forget. They don't just forgive. It doesn't fall out of their vision and sight. They file a substitute for a return. Okay, what's a substitute for a return? Means they file the return on your behalf in the interest of not you, the government. Meaning, hey, they may file a married filing joint with your spouse and bring in W-2s, 1099s, 1099Bs. Do they give you the expenses on your 1099 NECs? No. You ran a business, you collected $100,000. They show $100,000 on Schedule C, and they hit you with Social Security and Medicare tax at 15.3%, and then they hit you with federal income taxes on the full taxable amount. They're not giving you anything more than the standard deduction. They're not giving you your kids. They're not giving you any other deductions that you have, any tax credits that you would have. And they file the return on your behalf. And now, what do you owe? You owe $30,000 or $40,000 from that year, plus penalties and interest. But wait a minute, do I really owe that? Well, we sit down and we will go back and file those returns. Now, if you haven't filed, the IRS only requires 6 years of returns. But if what we would file for you is better than what they have filed for you as a SFR, substitute for return, we're going to have you file that return. If the return is already filed and accepted, and it's better than what we come up with when we're preparing your return based on the information you give us, highly unlikely, most of the cases it's not, but sometimes it is. Then, we go through and file the return and get rid of the SFR, which does start the statute of limitations at that point. So it's some of the things that we've got to consider is how long before the statutes run out if we file or don't file. So we're looking at all of those variables. We had a client that wanted to come in and has not filed since 2014. So we're talking about 11 years of tax returns to do. We're only required to file 6. We started preparing those 6, but then we looked at what the IRS did for 15, 16, and 17, and their numbers were so far off that it was better to file those returns than accept the IRS's numbers. Plus, when we looked at it, they didn't do the substitute for return until I think 15 was filed in 2019. So we still had another 3 years to go. And the other years weren't filed until 2023 or 2024. So they had a long time to go. So it was really worth doing it. We got 2014s prepared, and compared to what the IRS had, the IRS numbers were much lower than ours because there was other income that came in. And so we chose not to file the return and went with the IRS's number. So we can play the game between the two to determine, hey, what do we need to file? What don't we need to file? But we definitely have to start with those first 6 years of returns because the IRS is going to, at the very least, require those. Now, we get through doing all that. Yes, the statute of limitations restart, but there is a solution at the end of the tunnel. The big difference is the IRS for 15 and 16 was looking at $25,000 to $30,000 before penalties and interest. And we were able to file the actual returns and get that liability down to 0. Now it doesn't matter what the statute of limitations are because the returns are correct and we're going forward from there. So, those are the things that we're looking at, and it helps reduce that liability as quick as possible. And, now we're waiting for them to process those returns. Those returns will be processed and we'll get that part done as soon as possible. So, we look at all those things to prevent the IRS from doing anything. And then we call the IRS and get holds in place if we're doing representation for you so that that representation keeps them at bay so that you're not adverse collection activity on you while they're processing those returns. So, those are the things that we kind of look at. Now, if we come back and determine, hey, look, you filed all your taxes, everything is correct. Now what we need to do is first put a hold in place with the IRS, get them to stop their action. Because you're a client, that's the first thing we want to do is get that hold in place so that you're not faced with a bank levy. And those bank levies, again, are devastating if they take everything you have. Now, if you're not a client and you just faced that dreaded bank levy, sometimes we're able to help you. We do have many years of experience negotiating with the IRS for the release of bank levies. Again, the real purpose of the IRS bank levy is to collect taxes on behalf of the federal government and to get your attention so that they can collect more from you. So if you don't pay your taxes, the IRS demands payments. They do it through letters. They can even do it through a field visit. And if you disregard all that stuff, the IRS gives you legal notice that they're going to resort to other means to collect those taxes. And that method, it can be bank levies. And, if you have that bank levy, again, you're not going to be able to pay your bills out of that bank account. They just levied it, everything that went in there. And when do they do that? The worst day possible, the day you get paid. You just talked to them and you told them when you got paid. most likely because they asked you the question and you answered it. And so now that revenue officer is going to issue that levy on the most dreaded day possible, the day you got paid. And guess what the bank has to do? The bank has to deliver to the IRS within 20 days the full amount that was in the account on that day, unless the amount in that account is greater than the actual bank levy. So let's just say you've been sitting at 20,000 in your bank account, your levy's for 10,000, they're going to take 10,000. Hey, you should have paid money, anyway, and dealt with the problem. Now they took the money. You still got money to pay your bills and everything, However, if the levy was 10,000 and you got $1,000 in your bank account, today's payday, well, now you don't have anything in your account. Now, to add insult to injury, your bank then fines you $250 for servicing the bank levy from the IRS. So you're not only just in the hole that $1,000, but you're also in the hole for that $250 that you owe to the bank. So when the IRS issues that levy, your bank is instructed to freeze all funds in the account and forward the funds to the IRS. The bank can't just ignore the letter. They are obligated to follow the instructions of the IRS, and the IRS will impose serious penalties upon any bank that disregards those levies. So don't think you can call your banker and ask them to have them ignore the levy. They cannot do it by law. Now, remember one thing: when the IRS issues a bank levy, it's on your Social Security number or your wife's Social Security number, and any and every account that is tied to those Social Security numbers. That means if you have an account for your children or family members, any account with that Social Security number can and will be levied. Now, you think I'm joking. You think, oh, he's not serious, or no way they can do it. I had actually a friend of mine who knew what we did, but he never came to us and hired us. Thought he could deal with this all on his own. And one day I get a phone call from him and he goes, Mr. Fowler, Barry, I have a real problem. I'm like, okay, what can I do? What's happening? Let's see what we can get going on. IRS levied my bank account. Okay, why didn't you call me before this? Well, I thought I could deal with it. Well, you and I have talked about what I do and how good we are at what we do. Yeah, but all the time you talk to me, you tell me what you do, and it sounded easy, so I started doing it myself. Okay. What did you do? It doesn't matter. They took everything I have. Okay. How much did they take? Well, it was only a couple thousand out of my account, but then they raided my kids' accounts that my mother put a bunch of money into for their college education. And so they levied close to 100,000 out of their accounts. Okay. How much do you owe the IRS, by the way? Oh, I'm close to $500,000, but I'm dealing with it. Yeah, you really are dealing with it, aren't you? Not to be sarcastic to you, but you're dealing with it. Just got it. Your account's levied, your kids' account's levied, their college education fund is gone. What would you like me to do? What can you help me? Well, yeah, I can help you. So, we signed him up for a deal and started working with him. And, we were able to work with the IRS to get money returned. It took a lot of fighting and arguing with the IRS and prove to the IRS that the money that came in was money from his mother, not from him. Had to get signed and sworn testimony. to be able to go to the IRS and get the kids' money back. And then we had him immediately remove his Social Security number from their accounts and put the grandmother back in control of her money that she gave the kids. And so her, along with the kids, could control their funds and not have it subject to levies for him because of his ignorance in wanting to deal with this himself instead of contacting a friend who would help him through this situation. Now, when money doesn't belong to you, but your Social Security number's on it, they're going to take it, obviously. Now, you've got to find a way to get that money back for those that are involved. So we always tell people, hey, look, if you've got IRS problems, make sure your Social Security number is not on anybody's account, only your own account. No, hiding it under your wife who you file joint with is not hiding money. Hiding your money under somebody else's name is incorrect. You are committing fraud. You cannot do that either. Giving money away to people is a dissipated asset and can be clawed back by the IRS. So don't think you can get away with things because, hey, you're transferring money or putting money in other people's names. IRS does not like that. It does not sit well with them, and it is not going to work well in getting a solution. So, these are the problems that you run into. And sometimes just because you're listening to the show and think, oh man, I've gained a lot of expertise in dealing with this, that it makes it easy to do. See, we don't just work with the IRS, we know more than what the IRS is. And we deal with agents sometimes that have no clue what some of the things are in the Internal Revenue Manual. And we got to work with them and get them to follow what's in the manual. At the end of the day, their only goal is to collect every dime they can from you, the taxpayer, and avoid, doing things that they should have to do or should be required to do in your situation. Now, what else is happening? What else do we have to do? The next step is those wage garnishments. It's not a solution to your problem. It's just a forever payment. Most people that are in wage garnishments quit their jobs and move somewhere else. And they're good for maybe 6 months to a year. And then the IRS levies that employer as well. But that means you're job hopping, no job security. Harder to find jobs when you're doing things like that. So I know wage garnishment is devastating. It has a devastating impact in your financial situation. You struggle to make ends meet when the IRS is taking everything they consider to be theirs and leave you what they consider enough money to live on based on their standard, not your standard. So we've got to go through and resolve this tax problem as soon as possible to get that wage garnishment lifted. We've got to work through that. So now we're at solutions. What relief can you get? We talked about a full pay installment agreement. That is the easy one. If you can afford their full payment, whatever they're requiring, hey, you can pay it. Do it yourself. Call them up. Hey, they tell you it's $2,000 a month and you can afford it. Tell them, great, direct debit on this day, and they'll take the $2,000 from you, right there. So, hey, it is what it is. It can make it simple, make it easy, and then you kind of go from there. So that's your full pay installment agreement. You can pay it until your debt goes away. They're going to give you up to 84 months, depending on statute of limitations and other things. But they're going to calculate it based on the statutes for the older years and then coming forward to the more current years. So they give you plenty of time, but they're going to want all the debt paid off before statute of limitations run out, of course. So what's next? Well, it could be CNC. What's CNC? currently non-collectible. Now, that is what it means. It means that the IRS has determined there's absolutely zero that can be collected from you because you don't have enough money coming in. You usually have low income. Maybe you're on Social Security. You have other debts. You have house payments, mortgage payments, rent, car payments, whatever it is. And we can use all that stuff and prove to the IRS that, hey, you don't have a dime to your name to be able to pay the IRS. And they'll put you into a non-collectible status. It's a temporary status. It's going to last for maybe 2 years. It could last longer. But if your income goes up, they're going to ask for a review. And when that review happens, if you don't answer to it, then all of a sudden that non-collectible status could go away. So we've got to look at all those things as well and how that meshes and fits together. Now, you do have a couple other options. And those options we're going to discuss after this short break. We'll do that right after this. See, and I'm surprising my producer because I told her, hey, we're only going to run maybe one commercial, maybe two. But hey, we can get to commercials out there. And our commercial would actually be for Taxation Solutions, tax relief. Our phone number is 888-930-1016. Again, 888-930-1016. Get the solution to your tax problem that you can afford and you deserve and what meets the qualifications of the IRS. If you don't want to call in, we have a no judgment zone. We're not going to pass judgment on you. We're actually going to work with you to find you that solution. So here's our commercial. Come back right after this talking about solutions to your tax problem.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Hey, while we were at that short break, I did something really cool. I went over to our website just because, hey, if you go to taxationsolutions.net, we got some really great information and everything over there. One of the links at the top of the website is our show, Tax Talk for You. Click on that and you can go over to iHeart. Really neat. You can see a lot of our podcasts over there, episodes that we have up here, listing everything from selling your business, setting up your side hustle as a business. Hey, we did one all on IRS payment plans and the type of payment plans that are available. So, we were just talking about the full pay agreement, and we were talking about non-collectible status, but there are other types of payment plans that we can do. We can do what we call a stepped plan, where we start out at a lower amount today, and next year and the year after, we step it up a little bit each year to still meet the guidelines of the full pay for the IRS. But it gives you the ability to modify some things in your life to change so that you can afford to pay that. The other payment plan that we do use is a partial pay installment agreement. Now, partial pay installment agreement has its advantages and it has its disadvantages, just like an offer and compromise. The advantage of a partial pay installment agreement is it reduces debt that you owe the IRS, because you're only going to pay a partial of the amount that you owe, which the negative is you're still going to be paying them over the period of years until the statute of limitations run out. Now, we use that in cases where we may have some really old debt, but we can prove that you can only afford to pay a small amount. And we prove all that to the IRS. And then we get that partial pay installment agreement in place, and you pay it until statute of limitations run out. And as long as you make your payments, everything stays in place. The beautiful part is that statute of limitations continue to run, and certain debts fall off over that period of time of the partial pay installment agreement. Now, conversely, when we do offers and compromise, yes, all the debt goes away once you pay the offer amount. However, you are still on the hook for the next 5 years from when it's accepted to be 100% in compliance. Now, if you can be in compliance and you have no problem being in compliance, then that might be the right solution. But when you fall out of compliance, or you owe money to the IRS, or something else happens, guess what? That offer and compromise goes away, and all that debt comes flooding back to you. And when all that debt comes flooding back, you're still at where you were before you filed for the offer, plus penalties and interest that accrued over time. And now you owe more money, and you might be in a better situation where you can afford to pay them. Now, you're talking about wasting the offer and compromise and not working. Some of the other things that I saw on here is, whole podcast on IRS collection process. So you want to know everything that the IRS can do when you owe them money. The whole process is here. And it was a great podcast that we have up there on May 11th. You can go back and listen to that. So some beautiful things when I'm sitting here looking at iHeart and Spotify and the other. You can see all the different podcasts we've had from all of our different shows. Some of these might help you if you got IRS problems, or maybe you're working on setting up a new business and looking at S Corp versus C Corp, LLC, what's right for you. So go back over to iHeart and look at Tax Talk, the number 4, the letter U, and you can see everything there that we do. Or make it simple. Go to Tax Talk, number 4, letter U.com. And then you can go there and see all of our episodes and look us up there as well. And you can listen to many, many episodes that we've been doing over the last couple of years that might help you in your tax problems, in your business, or setting up a new business. So it's a great resource for you out there as well. Offers and compromise. The holy grail, as people would say, in the IRS resolution business. I mean, think about this. You hear the radio ads that say, we can settle this for pennies on the dollar. We can settle this for much less than what you owe. We can make all your debt go away. I don't remember all the other things that I hear on the radio time in and time out. And that's what they sell. They sell that holy grail, that pipe dream that everybody wants, but not everybody qualifies for it. Matter of fact, qualifying for an offer and compromise is very, very difficult. It takes a lot of work. It takes a lot of patience. And then you've got to make sure that all your I's are dotted, all your T's are crossed, and you don't have a lot of equity in your house. You don't have a lot in your retirement accounts. You don't have a lot in your bank account. You don't have cash sitting around your house or buried in your backyard or in your mattress. That your income isn't really high. That maybe you have car payments. And then you have all those boxes maybe checked, Then you get into filling out the forms, and the IRS limits your deductions. Wait a minute, what do you mean? I've got that expense. That's what I hear all the time. They have what they call national standards. These are the standards of income that they allow you to deduct. So housing, food, clothing, insurance, car payments, fuel for your car, repairs, maintenance. All these are limited. If you don't have a car, they give you money for public transportation, even if it's not enough, depending where you live. If you have state income taxes, they give you that deduction. So they give you certain deductions out there, but then they're all limited based on national standards. So you may make $100,000 a year. Maybe you can't afford to make the payments because you have a high house note, you have high car payments. Maybe you're married, so you've got 2 cars, plus you've got 2 cars for your older kids, and you've got college education coming out. Well, guess what? You don't get to deduct the 2 cars for the kids, and you don't get to pay college education out of your money. Yeah, kind of interesting. When you fill out your FAFSA, you're responsible for the kids and have a family contribution. But when you fill out your 433A, B, and 656 for the offering compromise, you don't get to deduct that family contribution that you have supposedly on your FAFSA when the kid is in college. Just the way it works. So now you come down to the realization that per the IRS, you can afford to pay. Maybe you can't afford to pay cash today. Maybe your income is lower, but yet you have a lot of equity in your home. Well, that equity position is what the IRS is going to require you to pay in an offer and compromise. So makes it difficult. Or maybe you have money sitting in an IRA or 401k. They're going to expect you to pull that money out and pay to the IRS. Now, a lot of times we can make you loan money out of your 401k and start paying it back, and you get the deduction for the mandatory payment. So it lowers the ability to pay on the cash income side. And you took the money out of the 401k and paid it to the IRS. So that is an option out there. But again, if you got home equity, they're going to want you to go get that equity out and pay them as well. Now, there's a sophisticated calculation in that because it's not always the full amount of equity. It's not the full value of the house. They're going to take an 80% quick sale value. So if your home was worth 100,000 and they're going to say 80%, it's now, according to the IRS, worth 80,000. And then they subtract what you owe in the mortgage. So if your mortgage is only 40 or 50,000, then you may have 30 or 40,000 left to be able to give to the IRS, and you have to get that money to pay them. Now, it can be paid over a period of time, but it's a short window to pay them. So it's little things we've got to keep in mind when we're going through and doing that. And that's why we could be reverting back to that partial pay installment agreement. Hey, unfortunately, we're coming up close on the end of time here. Again, if you've got an IRS problem and you owe the IRS money, don't ignore it. Those bank levies, wage garnishments can really, truly affect you in your life, your family, your spouse, your significant other. It's going to truly have a negative impact on your life. So don't ignore it just to ignore it. Make sure that you're getting some help. It is not a do-it-yourself program. Yes, if you want a full pay, I'll tell you, maybe it's a do-it-yourself program. But if you can't afford the full pay, then you got to get the help you need to stop the IRS from collections and coming after you. If you need that help, call Taxation Solutions at 888-930-1016. Wow. Tax Talk for You. We're here every Monday at 10 a.m. Eastern Time on W4CY Radio. Don't forget to tune in. Don't forget to listen to us, or go find us at taxtalk4u.com. Follow us over there, subscribe, listen to our podcast, get the information that you need. But above all, have a God-blessed and glorious week. And we'll talk with you again next week, 10 a.m. Eastern Time, right here on W4CY Radio at Tax Talk for You. See you next week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.